Today, we're diving deep into SoFi's performance and the key factors that influenced it recently. Let's get started.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. To kick things off, SoFi ended the day slightly up, closing at 0.74% in the green. However, we saw some notable volatility with a high of $8.28 and a low of $8.06. Trading volume was robust, with 48.8 million shares exchanged compared to the average of 38.8 million. Across the broader market, there seemed to be a cautious approach from larger investors. Despite this, SoFi exhibited a different trend. Many transactions on the secondary market were above $100,000, primarily consisting of buys over 90% of the total. Even in after-hours trading, SoFi attracted significant attention, particularly from the dark pool, indicating heightened interest and some connection to short-selling activities. Today, short sellers were quite active across the market, ramping up their positions. In SoFi's case, they returned 1.27 million shares, which is approximately 19.09% of the free float being shorted. This translates to about 199.84 million shares, with a short utilization rate of 51.3%. The short score currently stands at 72.34. Given these numbers, it appears shorts might be overextended as we approach tomorrow's market events. Currently, there's a 63% probability of a 50 basis point cut, though major players like BlackRock and Citi are advising against expecting that level. A 25 basis point cut seems more plausible, which aligns with my thinking, but we'll have to wait for the official statement from Powell and the subsequent commentary. In terms of economic indicators released today, retail sales figures came out better than expected, showing a 0.1% increase compared to a forecasted decrease of 0.2%. This suggests consumers are still spending, which has always been a primary concern for Powell and the Federal Reserve. Interestingly, the Fear and Greed Index shifted into the greed territory today before slipping back to neutral. Despite this fluctuation, there is still an appetite for risk among investors. There wasn't any significant news about SoFi itself today, but a few insider transactions surfaced after hours. Derek White sold 61,000 shares, Robert Levitt offloaded 4,300, and Jeremy sold 135,000 shares. It's a bit frustrating to see the same individuals selling repeatedly. To clarify, these transactions were marked with code S, indicating a straight sale, rather than for tax-related reasons. It seems these individuals often sell after receiving shares, which raises some eyebrows. For contrast, let's look at Anthony Noto, SoFi's CEO. His recent activity has shown consistent buying, highlighted by multiple purchase transactions marked with code P. Noto's commitment to acquiring shares is a positive sign for investors, showcasing his belief in the company's long-term potential. Shifting gears to options trading, we saw $9.39 million in calls versus $1.95 million in puts, with a substantial 44% of all options trades being bearish today. However, the optimism for SoFi is evident, particularly around the $9 strike price. If this level is hit, we could witness a gamma squeeze due to the significant volume of options in play. With SoFi currently closing at $8.12, it's trading within a critical range. The next resistance level sits around $8.40. While strong support is established at $8.02. Looking at technical indicators, SoFi is positioned towards the higher end of the Bollinger Bands and has a stochastic reading of 66. From a technical standpoint, if SoFi climbs to around $8.30, it could be viewed as overbought, potentially leading to a pullback. We've observed similar patterns in the past, where a rise has been followed by a retreat. It's clear that while there's optimism for SoFi's future growth, many investors are overly fixated on monetary policy implications. Interestingly, there seems to be a slight exit of retail investors today, suggesting some are anticipating a downturn ahead of the FOMC meeting. So, I'd love to hear from you. If you sold shares in anticipation of a pullback, what are your thoughts on how deep that pullback might be? Are we looking at levels around $7.50 or potentially the 200-day moving average at around $7.60? And what do you think about the insider selling? Is it a red flag or simply a routine financial move? Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.